Ladies and gentlemen, good day and welcome to the Cellsat Ltd Q2 and H1 FY'25 earnings conference call hosted by Ventura Securities Ltd. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note that this conference is being recorded. Before we begin, I would like to point out that this conference call may contain forward-looking statements about the company, which are based on the belief, opinions, and expectations of the company as on date of this call. These statements do not guarantee the future performance of the company, and it may involve risks and uncertainties that are difficult to predict. I would now like to hand over the call to Tushar from Ventura Securities. Thank you, and over to you, Tushar.
Thank you. Good day, ladies and gentlemen. On behalf of Ventura Securities Limited, I welcome you all to Cellsat Ltd Q1 and H1 FY'25 earnings conference call. The company is today represented by Mr. Concall, Managing Director, Mr. Umesh Singh, Chief Executive Officer, and Mr. Charanjit Kalra, Chief Financial Officer of the company. I would now like to hand over the call to Mr. Trivedi for his opening remarks. Thank you, and over to you, sir.
Thank you, Tushar. A very good day to all of you, and welcome to the Q2 financial year 25 earnings call. As we are here to discuss Cellsat's performance and the significant milestones we have achieved over the past few months. Firstly, I would like to state that with over 2 decades of expertise, Cellsat has evolved into a leading design house and manufacturer of radio frequency equipment, catering to the full spectrum of mobile networks from 2G to 5G and beyond. Our products, including RF repeaters, active DAS system, and antennas and accessories, play a critical role in ensuring seamless connectivity for millions of users worldwide. These essential components are integrated into telecom towers and public safety networks, providing both reliability and scalability. Today, our portfolio boasts over 27 plus products, making us a comprehensive solution provider in the RF equipment sector. Our commitment goes beyond manufacturing. We deliver end-to-end solutions covering planning, designing, and installation, supporting mobile operators in optimizing their network infrastructure. Notably, we have successfully launched our interference mitigation system, a testament to our dedication to driving superior telecom services. Moving to our financial highlights for Q2 financial year 25, our revenue from operations this quarter reached rupees 438.1 million, up from rupees 359.4 million, marking a 21.9% quarter-on-quarter increase and a 24.6% year-on-year rise. The growth has fueled by robust revenue realization, the accelerated rollout of 5G services, and heightened demand for network coverage solutions. Our EBITDA for the quarter came in at rupees 32.2 million, reflecting a 27.9% quarter-on-quarter growth, with an EBITDA margin of 8.3%. While our manpower expenses increased in Q2 as a strategic investment in expanding our workforce, this positions us well for future projects delivering in upcoming quarter. Additionally, the issuance of employee stock rewards in Q2 underscores our commitment to retaining and nurturing talent, an investment that, while impacting short-term margins, will fuel growth across both our manufacturing and services setup. Our PAT was reported at rupees 41.3 million from rupees 11.7 million, representing a remarkable growth of around 250% quarter-on-quarter and 60.4% year-on-year increase with a PAT margin of 9.4%. Our half-yearly financial numbers. Our revenue from operations increased by 16.3% to rupees 797.6 million, compared to rupees 685.5 million in H1 financial year 24. Our EBITDA stood at rupees 64.5 million with a margin of 8.1% as compared to 12% in H1 financial year 24, reflecting the impact of strategic investment. Our PAT for H1 financial year 25 was rupees 53.1 million, up slightly from rupees 52.7 million in H1 financial year 24, with a PAT margin of 6.7%. Business update. Now moving on to our business update, we are proud to announce that Frox Cellsat has recently secured a rupees 31 crore order from Metro Telworks to enhance mobile coverage at Mumbai International Airport with a completion target of December 2024. We have also secured a rupees 16 crore contract for the deployment of our One DAS system at Navi Mumbai International Airport, marking our third major airport project. Furthermore, the deployment of One DAS at Chaudhry Charan Singh Airport in Lucknow has been successfully completed. Order book and future outlook. Our order book at the end of Q2 financial year 25 reached rupees 1100 million, a clear indicator of the trust our clients place in our solutions. This momentum, coupled with the pipeline of projects, positions us well for continued revenue growth. We expect Q3 to be particularly strong, with significant project billings lined up for completion. At the recent India Mobile Congress, we unveiled key innovations designed to meet evolving market needs, such as Active DAS for 5G, the Smart Mini Booster for IoT, VHF repeaters for railway, and Noise Shield solution. These new offerings are expected to contribute meaningfully to our revenue streams in the coming quarters. Industry developments. As we can observe that the telecom industry is undergoing significant capital expenditures, with leading operators like Airtel and Vodafone Idea upgrading their 4G and 5G networks. This trend provides us with ample opportunities to capture market share and growth alongside these operators. By aligning our product offerings with their network expansion efforts, we are confident in our ability to capitalize on the growing demands for advanced telecom infrastructure. Conclusion. As the industry continues its capex expansion, Frox Cellsat is strategically positioned to seize new opportunities with our innovative solutions. We are confident in our ability to scale operations, enhance our market presence, and consistently deliver value to our stakeholders. Thank you for your time today. I am happy to take any questions you may have.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. First question comes from Siddhartha from Caprice. Please go ahead.
Yeah. So hi sir. So congrats for the great set of results. So I'm new to this company, so just wanted to understand what exactly is our mode here. So what are we doing different, compared to our competitors?
Right. So hi Siddhartha. So look, firstly, we are a fully Indian company having product designed in-house by us, and this is and the coverage solutions which we are providing. So we are the only Indian company who is manufacturing these kind of products. There is no other Indian company who is manufacturing these kind of products in this range. So this is very unique for us, and that gives us leverage. But, now there is a focus on Make in India products, on products which are certified by government as NSDTA certified, National Security certified. So those kind of things give us an edge and makes us a vendor of choice by the customers.
So one more question, sir. If you look at our customers, so most of our orders, we cater mostly to Airtel, right? So just wanted to understand, so there is significant client concentration over there. So just wanted to understand your strategy here. How do you want to diversify going forward?
Right. So look, the things are changing slowly but surely. If you see our airport orders that we have been receiving, and which are the major project orders, those orders are coming from neutral hosts or system integrators. So like Noida Airport project which we have received, that was from a neutral host called ACES. The projects that we have received for Mumbai Airport or Navi Mumbai Airport, both of them we have received from a system integrator. Project for Delhi Metro, we have received from Motorola, which is a system integrator plus equipment provider. Project for Bangalore Metro, we have received from L&T. Right, so our solutions are now being taken by a lot of system integrators and neutral hosts, and that's the upside which we are seeing, which is making us less dependent on mobile operators.
Okay. So, and one last question from my end, sir. So our margins have been quite volatile, and you have guided for 12 to 13% margin, whereas in the first half of the financial year, we hardly have hit 10% or 9%. So, do you expect the margins to significantly go up in the next coming 2 quarters? And so I just wanted to understand the reason behind these kind of fluctuations.
Right. So look, firstly, the fluctuation happens. The kind of product mix that gets built in that quarter, right? So we have, as I mentioned, we have 27 plus products. So different product comes with a different margin profile. So it varies from what kind of product mix has been built in that quarter. As far as going forward is concerned, if you look at it, we are going to see most of our predicted growth in the next 2 quarters in revenues, whereas the fixed cost remains same. All these large projects are going to be getting to be built in these coming 2 quarters, majorly in Q3 actually. So and there is not going to be so much upside on the fixed costs. So fixed costs will stay same. And that's where it's going to make difference, and we are going to achieve still our targets of 12 to 13%.
Okay. Thank you, sir. Thank you. That's it from my end. I'll join the queue. Yeah.
Thanks.
Thank you. Next question comes from Narendra Shah from Robo Capital. Please go ahead.
Hi.
Hello.
Am I audible? Hi.
Yes, Narendra, you're audible.
Yeah. Thanks for the opportunity, sir. So a broad-based question, right? So going forward 3 years down the line, where do we see our company in terms of revenue and PAT? Do we see it as a 500 crore turnover company with a 50 crore kind of a PAT? What's our vision for the company moving ahead?
Yeah. So look, this is what you're asking is already been given by us some time back as our target. That by financial year 28 we are targeting to achieve 500 crores revenue, and margins in the range of 10%. So that's what we are aiming at for financial year 28.
Okay. Talking about big project coming up for building.
Sorry, can you please be a bit louder? Hello? Narendra,
Narendra,
I think Narendra.
Yes, there is no response. So shall we move to the next question?
Yeah, I think let's do that. If he comes back, then we can take him on board later.
Sure, sir. Next question comes from Raj from Arja Partners. Please go ahead.
Hello, am I audible?
Yes, sir.
Yes, Raj.
Hello. Actually, I'm new to the company. I just wanted to understand the business of the company. So, is the order book fully based on L1?
Okay. Raj, so we are a company providing solution primarily for the coverage enhancement of mobile networks.
Yeah.
That's what we do. Your question is if it is fully based on L1, so that's not the case. We do need to be competitive, but when you work with customers that we work with, they also look at the quality. So like Airtel or Vodafone, or Jio or Neutral Host, they need to look at quality as well, and so it's a mix of price and quality and the specifications.
All right. So, as of now, you have an order book of 110 crores, right? So, how much of this 110 crores is based on L1?
I will say, none of them is based on L1.
Acha.
Yeah.
Okay. And how much is the order pipeline?
See, we don't have a visibility of order pipeline as such. We don't give that order pipeline number. We are, quarter on quarter, we are only declaring the number of our order book. So that's the practice we have.
All right. And how much is the order execution timeline?
It depends on, again, from customer to customer. If you ask about this 110 crores pipeline, 110 crores order book that we have at the end of September, a good guess is at least 65 to 70 crores of this should get billed in Q3 and remaining should get billed in Q4.
Hello. I didn't get what you were saying. Can you repeat it again? How much of it will be executed in Q3? 50 crores around?
No, 65 to 70 crores should get executed in Q3 and the balance should go to Q4.
All right. So overall 110 crores will be executed by FY'25 end fully?
Yes.
Understood. And sir, since we design our equipment in-house, so how much of the raw material is imported?
Look, again, it depends on product to product because we have 27 plus products. But broadly, if you look at it, then I think overall percentage, if you look at it, it should come to 50 to 60%.
And the 50 to 60% raw material will be imported, right?
Yes.
All right. And I wanted to know how much of like a value addition do we exactly do? Like, are we an assembler exactly? Do we add any value in our products from our end?
Look, this is all our in-house design products. So depending on how you calculate value add, But if you do value add calculation as per what Government of India does, our value addition is more than 50%.
Okay. And sir, how many SKUs do we handle?
We have 27 plus products as of now.
Mm-hmm.
But then there are sub-variants of, let's say, digital repeaters has few sub-variants which are there. DAS can be configured in different forms. So those are additional to that.
Understood. And so since we design our product in-house, so it needs to be approved from the customer end, right?
Yes.
So for example, Geo is there. So once we design our products, then we go to Geo and then they approve it.
Yeah.
And after the approval, we get the order, right?
Yes.
And do we get the order directly from OEM or is it from a tier 1 partner?
No, so I didn't get your point. OEM or tier 1 partner. We get
what I'm trying to say is, do we get the order directly from Geo or Geo gives orders to someone else?
So we get orders directly from mobile operators, Jio, Airtel, Vodafone, directly from them.
Okay.
Yeah.
All right. And sir, I wanted to ask, who are our peers in this segment?
So there are, mostly international companies, like there is Comscope. Comscope has, by the way, sold their division of active DAS to another international company called Amphenol. So for a few $1 billion. And then there is Solid, which is a Korean company. Then there is what you call Pros. Pros is a Chinese company. So yeah, these are some of the main contenders.
So sir, for example, if Jio wants to give an order, so why does Jio give an order to us and not to the international company? Is the competition based on the pricing or quality, or like I wanted to understand what exactly differentiates us?
Okay, so look, it's for different product, it's a different differentiator again. And now if we take it to, let's say, the DAS product or repeaters, then basically for any active product, one needs to have, firstly the preferences for Make in India. There is a lot of push by government for that. Okay. So and we are the only Make in India company for these products. Second is for these products, there is national security requirement is also there. So national security certification has to be there. And that's what we have, being a local company. And that also gives us an edge. For other items like accessories, let's say, jumpers or CIPRI cable. Now, these international companies have their own, if they bring in from outside, they take a lot of shipment time. Now, these are required, immediate basis. So being a local, we can provide it locally to these customers. We have been supplying these items consistently for last 6-7 years to them, and they are happy with the performance. They are happy with the quality. So yeah, it's just simply a continuity.
Understood. And sir, I also wanted to understand, for example, if we take a mobile tower, yeah.
Can you join back the queue?
Yeah.
Okay, sure. Thank you.
Thank you. Next question comes from Akshita Dev from Vibhog Commercial Limited. Please go ahead.
Yeah, hello. Am I audible?
Yes, Akshita, you're audible.
Okay. Yeah, I just wanted to understand. I understand we don't give order pipeline of the future, but can you see what type of clients or what, where exactly orders would be coming from? And would there be any margin difference depending on which customer is giving you the order?
Look, mostly, we do business with mobile operators and neutral hosts or big civil contractors who are designing airports or metros. So these are our potential customers. So to say mobile operators anyway, Airtel, Vodafone, Jio, they are our customers. Second, the neutral hosts are like companies like Aphase or Crest Digital, Indus Towers. So those are our customers. Or system integrators like Metrotel or L&T. So these guys are our customers, or for that matter, Adani. So they are all potential customers, or they are our customers.
But I also understand that we had done trials with Jio, right? A while back. Did anything come of it?
Yeah, so we are doing business with Jio. The volume is still small there.
I think by this time we expected for the volumes to be picked up, right?
Yes, we are working with them, and we expect the volumes to be picked up. But as of now, they have not. They are still small.
Any reason for the hiccup there?
Look, things take time to build up to develop. So we are new to their system.
Any timeline on your side that what you believe will probably be the next
No, it's not possible to provide any timelines on that.
Okay, no problem. Thank you so much, and all the best.
Thanks. But to tell you that is our projections are not dependent on that. Our growth projections are not dependent on that. So it's not taken into our growth projection. If and when that will happen, it will be over and above our projections.
Okay.
Thank you. I request the participants to restrict with 2 questions in the initial round and join back the queue for more questions. Next question comes from Rohan Patel from Turtle Capital. Please go.
Hello.
Yeah, Rohan, hi. Yeah, if you can be a bit louder, it will be better.
Yeah, sure, yeah. Just in your opening remarks, you mentioned that you have successfully launched the IMS. Is that right?
Launched what? Sorry?
IMS, Interference Mitigation System.
No, so what I mentioned is that we have launched at the India Mobile Congress active task system for 5G, smart mini booster for IoT, VHF repeater for railways, and noise sheet solution.
So, as I understood that in one of your presentation, you mentioned that you are also working on IMS. So can you share the progress in that?
Yeah. So look, it is the trials have happened. If the commercial discussion is still on, and it's not yet concluded, so to say. So that's where it is.
So can you give us a time frame when this IMS will get, start reflecting, and when you will start working on that, like commercial orders? When will we start getting commercial orders?
Look, as of now, we don't have a timeline. See, if it happens, it can happen tomorrow. If it don't happen, it cannot happen, maybe 2 quarters. So we don't have a timeline still for that, a firm timeline. But yeah, we are working towards it.
Okay. And another thing was regarding your SMT line that you were going to, start with as manufacturing as a service. So can you share progress over there?
Yeah, so the equipment has been ordered now, and delivery timeline for that is by Q4. In Q4, we should be getting the deliveries for it, and but in Q4 it should be implemented.
Okay. So then if this business, this vertical of will be reflected in FY'25, if I'm right?
Right.
Sorry, FY'26, 26, right?
FY'26, yeah.
Yeah. So, out of those manufacturing and service, how much would be the in-house we will be using for our captive consumption, and how much that would be for third party?
So my current estimate is that 25 to 30% will be in-house and balance will be outsourced.
Okay. And we are targeting around 30% top line growth in FY'25, which takes us to somewhere around 205 crores. And right now we are somewhere around 80 crores. So we would be 85 crores. So we would be in H1 we did 85 crores and around 8% EBITDA margin. And considering your guidance of 12 to 13% EBITDA margin, we need to do in H2 around 120 crores with 15 to 16% EBITDA margin. So what gives you confidence that we'll be able to make in second half 16% EBITDA margin?
The orders in hand.
Okay, so the orders in hand will help us.
Yeah.
And second thing, your long-term guidance of 500 crores, which you have been stating for last 2 years, what we have seen is that there has been fluctuation in EBITDA margins that you were targeting. Like in last calls, you were confident of doing 14 to 15% EBITDA margin, and in your remark, in this remark, you have said 10% margin. Is that PAT level or is this EBITDA level?
No, so this is for the long term with 500 crores revenue in financial year 28. I'm saying the EBITDA margin should be in the range of 10% at that time. And this is a cautious approach. I don't want to be, giving a number which is difficult to reach. I don't know, I cannot say today what kind of exact margins we will be able to make at that point in time. So it's a bit of caution which I have put there by stating that yes, we should be doing EBITDA of 10%.
Okay. Like we have lowered that by 400 to 500 basis point.
Yeah.
Yeah, thank you. That was from my side.
Thank you.
Thank you. We have a follow-up question from Siddhartha from Caprice. Please go ahead.
Hi, sir. So just one more question from my end. So there has been a recent change in management. So how are we looking at it? So has there been any paradigm changes as far as company's operations are concerned?
Look, we have we have promoted our marketing head to be the deputy CEO of the company. That's the change. I think that's what we are talking about.
Yeah.
Yeah. So it's a natural progression and promotion. We hired a CEO who has left us in March. So we are looking for a replacement to him, and it is a process for that.
Yeah, and so yeah, that's it from my end, sir. Yeah, thank you.
Okay, thanks.
Thank you. Next question comes from Rajesh S., an individual investor. Please go ahead. A repeat question comes from Rajesh S. Please go ahead. There is no response. Next question comes from Sumit Chopra, an individual investor. Please go ahead.
Hello.
Please go ahead, sir.
Yeah, Sumit?
Yeah, hi.
Yeah, hello.
So, this is regarding the interference mitigation solution itself. In last quarter, like you said, you were waiting for the operator, a bigger operator, to conclude a deal as it was getting included as a part of other big network deal. So I just wanted to know, were you referring to the Vodafone Idea deal of 30,000 crore, which they have just signed with Nokia, Ericsson, and Samsung? If yes, does this means we haven't got any order from this deal?
No. So this was for Airtel, because the trials have been done for Airtel. Airtel has also concluded a deal with Ericsson, Nokia, and Samsung, if you got to know. And post that deal finalization with these operators, we expected to have closure of our deal. So that's for what we are waiting for.
So that option is still under pipeline, or everything has been closed now?
No, it is under pipeline. It is under pipeline.
Okay. And sir, a few quarters back, we were very positive on the BSNL 4G deployment. If I can recall correctly, in some of the quarter, we were expecting a 100 crore run rate in the past. So, in past also, we have supplied some parts to the Tejas. So, sir, recently there have been news that Tejas have deployed approximately 25,000 sites for BSNL 4G. So, are we supplying any product there, or any major order that we are expecting from BSNL going forward?
Yeah, so we are supplying to Tejas currently the products for which we had made an announcement, I think more than a year back. So that supplies are going still to Tejas for BSNL project. And we didn't have much success as of now for other products there. The price has been very competitive as they asked. So someone asked, if it is a L1 deal. So there we were doing L1 deals, and we didn't want to compromise much on our margins, so we have not picked it up. That's how it is. So in a market there are a lot of opportunities, but then we need to ultimately decide which one to pick, which one not to pick, and still achieving our targets. So that's where we are.
So just to conclude that, sir, this Tejas 1 lakh site which we were expecting earlier, so this currently is not now in our plate. We don't want to, because of the margin, we don't want to go ahead with this.
Yes.
Okay.
We are doing some business there where we are able to secure our margins. So that's the position.
Okay. And sir, just one last thing, like my previous to me, one participant was also asking regarding the same. So like in previous quarter, we have guided for 14-15% EBITDA margin, and in this current quarter, we have reduced it to 12-13%. So sir, what exactly has changed in a period of 3 months that has make us to reduce the guidance by 2-3%?
Look, there is we are seeing raw material costs going up slightly, and customer is not increasing the prices accordingly. Mobile operators are very tough to go and ask for increase in price, and that is what has impacted us to take this call of slightly reducing the expected EBITDA.
Okay. So that has changed us to give 28 guidance to more conservative side of 10%, I believe.
Right.
Okay. Thanks for the opportunity, and best of luck.
Thank you.
Thank you. Next question comes from Eamon Kadilkar from HK Finance. Please go ahead.
Hello, sir. Am I audible?
Yes, Mr. Kadilkar.
Yeah. So thanks for giving me an opportunity. So I would like to understand the opportunity size that we are looking for. That's the first question. And the second question is, like, imagine like whatever is the cost for putting a one tower. So what percentage of that particular cost are we targeting with our products?
Mr. Kalekar, I didn't get your point, what you're saying, what kind of opportunity we are looking at. So
what is the market size we are looking for, with this particular kind of set of products that we have? So what is the total market size that we are looking for? What is the total market size of this kind of products?
Okay. So look, our biggest product so far is our active DAS product. And globally, if you look at it, it is a market size of few $1 billion.
Okay.
That's the global market size, which it has. And the good news is that we have recently picked up on this market. So Lucknow Airport was our first successful project of active DAS, which has been implemented, commissioned, handed over, about 6 months back. Following that success, we have got 3 large airport projects now. One is Noida Airport, second one is Mumbai Airport, and third is Navi Mumbai Airport. So this is a very good direction that we have received in this huge market segment, I'll say. And this is the area where we will be growing in the coming future. A lot of development efforts will be going on in this direction, and we'll be expanding in this market. Second one is digital repeaters that we have, which is again active product, which is there. So that market is also there, but it's not as big as DAS product. And then our remaining products, which are classified as passive products, which includes antennas, or which includes splitters, couplers, IBS accessories, or network accessories. That market is relatively small to cater for, and that's within India. That is something like maybe 500 crores market annually, around that number.
Okay. And are we looking at any capex in future?
We are, putting capex in SMT line. So that should be concluded in Q4 this financial year.
So what is the cost of that particular capex, and what is the revenue opportunity that we are looking from that?
So that capex of that, we are taking it about 10 crores.
Okay.
And the opportunity for that is, as we see, it can take us to somewhere like 150 crores, 200 crores revenue from that capex.
Okay. So that's all from my end, sir. Thank you.
Thank you.
Thank you. Next question comes from Rohit Kumar, an individual investor. Please go ahead.
Hello.
Yes, Rohit.
Yeah. First of all, good evening, everyone. And I have basically 2 questions. The first one is my question is, management is expecting around 30% growth for FY'25, and after 2 quarters, for this current quarter, the revenue is around 80 crores. And to achieve of 30% growth revenue, for around which is you have guided around 30% for the current fiscal year 25. That will be revenue which is around maybe 200 crores. So how confident we are to get 120 crore revenue in next coming quarters, the next 2 quarters?
Rohit, we are pretty confident to achieve it. And as someone has already asked what gives us that confidence, then our open order book gives us that confidence that we can achieve it.
So mostly maybe, maybe in the next coming 2 quarters, maybe we are expecting around 60-65 per quarter, 60-65 crore per quarter.
Yeah. So we had 110 crores of open order book at September end. And after that, we received another large order of 16 crores. So
Yeah.
which, as of today, it makes us our order book in excess of 126 crore, right? So
Yeah.
we are pretty confident that we...
So that all will be completed in this FI.
Yes.
Okay. The second question is the EBITDA margin for the last 2 quarters was around 8% EBITDA margin for the last 2 quarters,
Right.
this Q1 and Q2. But your guidance says for 25 we will be around 12 to 13%.
Right.
So it means margin expansion will happen. Margin expansion will going to happen forward. So can you elaborate on this margin side, like how you're gonna get the margin expansion and why there is so much volatility in this your margin? Sometimes we get around 12, 13, sometimes we get 8. So can you briefly explain all these things?
Right. So Rohit, to answer your first question, look, we have increased our fixed costs in last quarter because the work has already started to deliver these large projects, and accordingly the costs have gone up. So last quarter, if you see, the manpower cost has increased, whereas revenues are same, right? In the coming quarters, the revenue is going to be much higher, but the fixed cost will remain same. Okay. So going by the simple logic, since the fixed cost is going to remain same and revenues are going to be up, the margin percentages will be much higher, and that's the reason why we'll be averaging out to 12 to 13% EBITDA.
Okay, so on average we'll be getting around 12 to 13% for the next coming quarters.
Yeah.
Okay, thank you.
Thank you.
Thank you. We have a follow-up question comes from Rogan Patel from Turtle Capital. Please go.
Hello. Yeah. I just heard that you said that SMT line can generate a revenue between 150 crore to 200 crore for us, which can, like from that 150 to 200 crore, can you explain us, like what would be the customer profile and product profile that we are going to cater to?
Look, our focus will remain as telecom products only. And the SMT line, this revenue which I mentioned, will not be just a SMT process revenue, but SMT process is going to be enabler for the business. So it will be not just SMT business, it will be box making business. That's what we are aiming for. Yeah. So and the product are going to be mainly focused on telecom products.
So can you share a few of these telecom products, like what would they be, like to understand the margins and to like where is the value chain certain products fall?
Right. So telecom products like Wi-Fi routers or ONTs and similar stuff, or maybe SFPs.
SFPs.
Yeah.
And who are who will be our final customers? Will that be this like normally our network operators?
So it will be both network operators, ISPs, distributors. So they are all the probable customers.
Okay. That was from my side. Thank you.
Thank you. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. I repeat, ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Next question comes from Janesha, an individual investor. Please go ahead.
Hello, is my voice audible?
Yes, sir.
Yes, please.
Thank you for the opportunity. I want to understand the market size in India for this active dash solution for 5G, which we have started.
Right. So thanks, Dinesha. Look, active dash solution is required for all the airports and all the metros and all the large venues that are there. In India, we are expecting 200 new airports to be coming in next 4 to 5 years. And on the existing airports as well, there is a technology upgrade required because at all these airports, the technology was implemented a few years back. And it has become old now, and it needs a minimum it needs is a 5G upgrade. So we are, we are expecting that it definitely is a market which is like, which runs into 400-500 crores market annually. It has that potential. It's just that, it's opening up now. And yeah, we should be there.
Okay. And who are our potential domestic competitor in this active dash?
As I mentioned, there are companies like, Pros is there. There is Solid, which is Pros is from China. Solid is from Korea. There is Amphenol, which is American.
Is there any domestic competitor we have?
Yeah, there is a domestic competitor by the name Cellcom, which is there, who brings it from China again in a SKD form and supplies.
Okay.
So yeah.
So what was our R&D spend last year, and what we are going to spend R&D for this year?
I don't have a ready figure with me right now, but it was approximately in the range of 2.5 to 3 crores, I think.
Okay. And for this year?
This year also it should be in the similar range.
Okay. What is our current capacity utilization as of now, and how we are going to see the capacity utilization in Q2, Q3, Q4 and next financial year?
So it again depends on, product to product. But the way we operate is, in terms of capacity, you need space, you need machinery, you need manpower. So we have space. We have built our new factory, so which has a lot of space. So we have no space constraint. In terms of utilization, you can say we are still utilizing only 50 to 60% of it. Second is machines. So machines or tools, we have enough. We are currently operating in single shift operations with enough manpower. So if we take into 3-shift operation, then right now, our utilization is maybe 35-40%.
Okay, understood. So if you are targeting to reach at 500 crores revenue, what I understood is we don't need to do major capex on this. Only what we have to do is we have to increase shift from 1 shift to 3 shift. Is this the right understanding?
Yes, you are right.
Okay. Thank you.
Thank you.
Thank you. We have a follow-up question from Raj from Arjav Partners. Please go ahead.
Hello, am I audible?
Yes, Raj.
I wanted to know that what exactly is this active dash solution?
Raj, what happens, like, let's consider airport. So you are at Mumbai airport, and at Mumbai airport you need a mobile signal, right? And all the parts of airport wherever you are going. So what happens is the way that mobile signal is made available in every nook and corner of the airport is through active DAS system. Mobile operator, so there is a hub room that is created. In the hub room, all the mobile operators bring their equipment, their BTS for different bands and different technologies. They are housed there, and the signal of each of these BTS gets plugged into our DAS system, which then kind of multiplex that signal and takes it to different corners of the airport. So this is how it is used.
Understood. And sir, apart from this active dash, what all new products are you working on, and are you planning to launch in FY'26?
Look, we are primarily, coverage-focused company, and our coverage solutions are not going to be limited to just mobile technologies or mobile operators. But we are also providing these solutions for public safety networks which are used like Tetra networks used by police and wireless or fire brigade or ambulances. Or there is another, VHF network which is being used by railways. So we are, we already have those solutions which we are supplying, and we are developing further on those solutions. That's where our focus is, and that's where we see, our expertise is.
Yes. Hello. Just 3-4 months back, I read an article about
Yes.
BSNL. So they are coming up with around 80,000 sites or something like that. So are we expected to get any orders from that?
So look, that is a old news. Half of it is already done, and it's done through TCS and Tejas. So we are, as I explained to earlier asked question, there are lot of things to be supplied there, and we have picked up things where we could ensure some margins. Those have been picked up, and we are supplying that.
All right, understood. And sir, for FY'26, do you have any figure in mind? Like for FY'25, I expect it to grow around 35%.
Right.
And for FY'26, can we expect a similar growth rate, lower or slightly higher, anything near that?
We definitely, aim to grow by 20 to 30% in FY'26 as well.
All right, yeah. And sir, regarding the capex, I just skipped a point. Is it an SMP line? What exactly is this?
It's a SMT line. It's like, machine, pick and place machine also they call it, where on a PCB, which is a bare PCB, this machine places the different components, like resistors, capacitors or ICs, and kind of solder it by machine automatically and builds a populated PCB.
All right. And from that SMT line, we are expecting sales of around 150 to 200 crores at peak.
That's the potential which it has. It's a part of investment to achieve that through EMS service.
All right. Okay. All right, sir. Thank you.
Thank you.
Thank you. Now I hand over the floor to Mr. Trivedi for closing comments.
Thank you. We thank all the participants for attending this session. We believe that we have satisfactorily run you through our company and financials and addressed every arising questions thereon put up on the floor by the participants. And we assure you that the company is on the right path and will be going as per the guidance. And if you still have any further questions, you may reach out to us. Thank you very much. Please follow up Investors Relations team, Kunal Shah, Vinayak from Captive Wire, if you have any questions which weren't covered up in the session. And hope you have a great day ahead. Thank you once again.
Thank you, sir. Ladies and gentlemen, this concludes the conference call for today. Thank you for your participation. You may now disconnect your lines. Thank you and have a good day.
Thank you.
Okay, thank you.